Are we in for another round of stimulus? You came here for the truth. Today we're going to look at what's been happening within, number one, the economy. The second thing I want to talk about is the stock market and how these are correlated in some ways. Not always, of course, because I'll tell you right now, the stock market and the economy are definitely two different things. The third thing I want to look at is freight. This is so important to track the prices, to see how this is affecting everything. The supply chain problems that we've seen all throughout last year are still going on into this year. It is unbelievable, but here we are. I want to talk about how this affects you. So let's go. Another day, another repo. Take a look at this reverse repo operation, $987 billion in a single day, the second highest we have ever seen. If it continued on this trajectory, we would be at $2.5 trillion by the end of the year. Is that going to actually happen? I'm not sure, but that's the pace we're going at. It's insane. It is insane. And, Zoltan, who's the expert at this, said that he would expect to see $2 trillion, so it's not that far-fetched. The Fed edged toward reversing its easy policies, but it may move slower than some expect. I don't think that's the case at all personally. I'm just bringing you what the article said. Look, let's be honest here. The Federal Reserve is in full control, and they are obscuring the details about what they know and what they are, quite frankly, willing to talk about. You look at the interviews that they do, the statements that they put out, the questions that they're being asked, and what do they say? Well, this and that, and this, let me say this, let me say that, and and da. And you get nothing. You get no information. Okay? It's just nonsense. So you got to remember, with all of the pieces of data that we do have, what can we do? We'll get into that more in just a second. US stocks climbed toward a record on GDP jobs data. And that's something from July 28th that you could see for yourself. On the 29th, things looked great as well for some of these markets. If I pull it up on the screen here, the Dow Jones, for instance, was up 153 points. By the time you're watching this, it's a different day. But the tech stocks out of China, they were punished again. I'm watching this as the market is open there, and you can see that the market for the Hang Seng Index, sort of like the NASDAQ equivalent, down 2%. It just shows you the difference in what's happening here. The same kind of conditions back in February 2020, where the whole world is falling down, the whole markets all around the world. And yet, you could see that the US market was doing well, everything's great, and then suddenly things flipped. Okay, let's look at this. The US economy expanded at a slower than expected 6.5% pace in the second quarter. I had talked about this previously, I believe in the last video. I found this chart here. You could see it for yourself. The shortest, I love this, the red area, the shortest recession in history. It's funny. US GDP trails forecast even as consumer spending surges. So they were actually believing, if you look at the first point there, they believed 8.4% was what we were going to see, and instead 6.5%. Just shows you how off they can be. There's details, if you want to read it for yourself. I think what's important to note is that the economy is running off of fumes. These fumes are provided by the government through the form of stimulus checks and quantitative easing. Look at the growth rate in a chart form. It's still significantly higher than where it was, 2019 timeframe. Using all their manipulated metrics and everything. So of course they see it as positive. That's the economist's view of it anyway. The initial jobless claims now at 400. We'll see, the trend here. If I pull up 1 year, it's been going down and down and down. Okay, that's the trend. Now, when we talk about freight, and I had something to pull up here, and now I don't think I have it up here. All right. Maybe if I have it later, we'll see. But essentially, before we get into this, let me move back into the Federal Reserve. There was one individual that had a little exchange with Jerome Powell, and I lost his name right here. Let me just see if I can quickly do this live in real time. Unfortunately, no. I must have closed that up. So what we're looking at here is a particular official from the government. I believe he's a congressman. And, this is during the congressional testimony. He actually, believe it or not, he asked Jerome Powell, if you're printing money, what do you expect to get out of this at this point? And then he starts going into his normal speech. We're looking for normalization. We're looking for this and for that. And he said, let me just stop you there. And he basically said, you're printing up all this money, but it's not really benefiting the little guy. So what are you doing here? And then he went into the same speech again, and then he kind of cut him off. So he was actually being confrontational. I believe his name is Trey, and he has a long word. I'll post it in the comments, okay? He actually said this. I retweeted the post that was made about this on my Twitter. If you want to check it out, definitely do. It's a short clip. I think you should watch it. So I'll try to post that in the comments since I've butchered the heck out of this. But I think it's amazing to see somebody actually providing. Just ask the question. Just ask the question. You don't have to be over the top. We don't have to get into all the deepest levels, but just ask the question. Hey, you're printing $120 billion a month. At what point is it enough? What are you looking for here? And, you're not really helping the little guy, it seems like. Just bringing that out into the public is so huge, in my opinion. Now, let's get into this here. Containers are being built at a record pace. It's still not enough. The cost of a new build container hits an unprecedented $3,800. Now, what I wanted to tell you about this was that I heard from people in the industry that prior to, let's say, early 2020 or into 2019, the old containers were being tossed out. They were being decommissioned. All right, let's get rid of these. We don't need all these. These are old. They're kind of falling apart. And now suddenly there's not enough. So it's unbelievable. Now this right here, $3,800, the price of a container has multiplied by about 4 times over this period. 4 times. And it's just crazy to see the price. But like I told you many times before, in my experience, the delay that I experienced on, when we're talking about overseas shipments and everything, was about 1 week at the source and maybe about a week or so at the destination in the US. 2 weeks? Maybe 3, maybe. And that's not fun. Nobody likes delays. But I just cannot understand all of this buildup that's been taking place in these prices. It just doesn't make sense. Now that's based on the evidence that I have personally. But everyone's experience could be different. Depends where you're importing and exporting from. It depends what you're trying to move from place to place. There are many factors, of course, but I just think it's something real fishy. Number 1, as prices move up, people have less to spend. Number 2, please remember that 70% of the US economy is the US consumer. Without them, you've got a problem. Number 3, I believe it's very clear, but if there isn't another round of stimulus, the economy is going to slow down. So as an investor, as an individual, watch what the government is doing with their next round of the infrastructure, with the potential for another round of stimulus, and that will directly impact the economy and may impact the markets as well. You may have seen this already, but check it out. Robinhood has the worst debut ever for an IPO of its size. Huge. And the funny part is MF Global was the previous one, MF Global. You know that group that took money from segregated accounts? Yes, that MF Global. Pretty funny. And then you're seeing what's happening with real estate today. Check it out. Real estate is booming in Bozeman. And I don't know if I pronounced that correctly, but essentially what they're saying is out-of-state buyers, they're coming in. It's a small place. It's getting bought up like crazy. Nobody recognizes it anymore. Then we've got this one here. Rich people of the Hamptons have a new headache. Even richer people. And the quote here says, "I'm a 1%er, but I bear no resemblance to these people." So things are really, really, really changing today. Brace for higher prices for ice cream, beer, and bottled water. Food and drink companies say that the recovery is buoying, I butchered that, apologies, sales, but leading to higher costs for ingredients, packaging, and transport. All right. This is important because you see that the containers themselves, and I was aware of this. If you look at, if you're trying to create products, of course, not only is the product important, but the packaging is important too, because all those costs have gone up. Cardboard costs have gone up, and plastics and things. So the raw materials have gone up. We know that. That's a fact. This just shows you how something can be directly impacting you as a consumer. Because you might say, well, I'm not going to choose this brand, I'll choose this brand. But they're all kind of affected by the same thing. From what I saw, the hand sanitizer situation, the prices had gone, astronomical. And yes, there was price gouging, but at the same time, the actual containers for these products, because the product, the demand was so high at that time when there was a real crunch near the beginning, earlier in 2020, the actual prices had skyrocketed, because they were going 24 hours a day trying to output these bottles, different types of containers of plastics, and certainly they couldn't keep up with the demand. So there was this period of time. Now what we have going on today is something else altogether. They do give you details here, but just basically saying this: the makers of some of the world's best-selling, there we go, I messed that one up. The makers of some of the world's best-selling food and drink brands warned that they would keep raising prices as they grapple with the strongest inflation in years. Are they going to bring the price? Maybe let's say that product you were buying is $1 and they bring it up to $1.50 and they, things get better. They bring the price down. Are they going to bring it back down to the $1 or is it going to be $1.25? We'll see. We do expect price increases to accelerate from what you saw in the first half. That's according to Nestlé. After several years of low inflation, all of a sudden accelerated very strongly starting in March, and it's continuing to accelerate. That's it. Pending home sales actually declined. Can you believe it? We'll see what happens. There's the potential here for a turnaround in real estate prices, but I think personally, we got to see a little bit of a squeeze on mortgage rates to make that happen, but who knows? If you haven't already, you've got to join up on the Insiders. It's totally free, and that's my way to get to you directly, you to get to me. It's a two-way street, okay? I got to get around the censorship. I got to get around the shadow banning, or what they call lower authority. I have to get into the next level so we can accelerate this channel into the 300,000 subscribers. Let's bring it. Let's make this happen. There are actually many, many days where I actually lose subscribers. I actually have a net loss on the day. And there are many factors for that, but I hope that you will get on the Insiders so that you get to the video of the day. We bring outside traffic in to reprogram the algorithm. I really appreciate it if you do. themoneygps.com. All right. If you haven't, hit the thumbs up button. Thank you very much for your support. If you haven't seen this video yet, you definitely want to check it out. Click it and I'll see you there.